Hello and welcome to Business 360. I'm Arundhati Ramnan and these are the top headlines that we're tracking for you this evening. Fear surrounding AI triggers a massive sell-off on Wall Street. Top 7 stocks and lower. Indian benchmarks feel the jitters as well. Top IT stocks lose 2.6 lakh crore rupees in market capitalization this week. Microsoft's AI head says that artificial intelligence could take over most white-collar jobs within the next 18 months. Former Infosys CEO Vishal Sikka says that there's a gap between AI's promise and enterprise-ready reality. Also warns that it should not be assumed that slow adoption means no disruption. Money continues to flow into AI firms. Anthropic raises $30 billion at a valuation of $380 billion. The company has more than 500 clients who are spending over $1 million compared to just a dozen 2 years ago. India's sovereign bonds rise after government undertakes a debt switch with the Reserve Bank. Centre issues bonds worth over 75,000 crore rupees maturing in 2040 to ease redemption pressures and borrowing needs for the next financial year. Axis Bank CEO Amitabh Chaudhary says acquisition of Credit Access Grameen is pure speculation, but also adds the bank is in early evaluation stage of the opportunity. No decision yet on whether to pursue the acquisition or opt out. That's an exclusive. BNP reportedly registers a landslide victory in Bangladesh parliamentary elections, clears the path for Tariq Rahman to become the nation's next prime minister. Once a political pariah, the Jamaat-e-Islami emerges as the second largest party. Country's election regulator is yet to officially notify the results. 68% vote yes in the referendum on constitutional reforms. A tumultuous first leg on the budget session of Parliament draws to a close. The House saw heated exchanges over the India-US trade deal and the unpublished memoir of former Army Chief General Naravane. Parliament will reassemble on the 9th of March. The top lawyer of Goldman Sachs resigns after latest revelations in the Epstein files. General Counsel Catherine Rumela remained a close ally of the convicted sex offender through his arrest in 2019. The Trump administration revokes an Obama-era scientific finding which concluded that greenhouse gases pose a threat to public health and welfare. The finding serves as the legal bedrock for the U.S. government's climate rules. White House calls the move the largest deregulation in American history, says it will reduce cost of new vehicles by an average of $2,400. Those were the headlines that we're tracking for you this evening, but the top story today. Continued fears of AI disruptions reignited a massive sell-off on Wall Street, with the top 7 IT majors clocking steep cuts. Indian tech stocks felt the jitters as well, with top companies losing close to 2.5 lakh crore rupees this week. The Nifty IT index has fallen over 8% in the last 7 days, and this marks the index's steepest drop in 9 months. Rima Tendulkar is here with all of those details. Rima, what's triggered the sharp sell-off?
It was one of the worst weekly falls for the Nifty IT index in recent times. At the session low, the index was down 11.7%, making it the biggest fall since the COVID times, March of 2020. Of course, by the end of it, the index recovered and ended with a fall of about 8%. But it doesn't hide the kind of pain the Indian IT companies have been going through for a while. From their all-time high levels, from the peak levels, we've seen a fall of 30-40%. 40% plus for TCS and Wipro, 30% plus for Infosys. Even Coforge and Persistent have seen very sharp drawdowns, and these were some of the best performing mid-cap companies. I think the big question everyone's grappling is this just another tech cycle where Indian IT companies will be able to pivot, they'll come out on tops, and therefore the sell-off that we're seeing is a bit excessive, it's a good buying opportunity, or is this time really different? Well, Citi has the view, and they're saying that this time it's different. Yes, the Indian IT companies have weathered many storms, Y2K cloud, but this time it's different for 3 key reasons. One, the incumbency risk. The Indian IT companies this time are much larger. They've doubled in size. since the cloud era. So therefore, they're the ones who are going to be disrupted rather than being the disruptor. Secondly, the AI impact is more pervasive. When cloud came, it impacted infrastructure, the way data was getting stored. But the impact of AI is on the operations and the business model, the entire value chain. And finally, the third reason is new AI work is coming in, but it's smaller. It's more pilot, exploratory, and not enough to offset the pressure on the legacy business on account of revenue deflation. But JP Morgan has a contra view. And here they're talking more about the kind of valuations. They're not talking about the business impact per se, but they are speaking about the valuations where they say the free cash flow and the dividend yield are now screaming deep value. They're saying that these are levels that we last seen during very severe market dislocation like GFC and COVID. And they've laid out 3 scenarios, and that is very helpful for us to gauge where Indian IT companies are headed. But of course, it depends on what your view is on growth. They're saying that from FY23 to FY25, IT companies grew between 2 to 3%. If you assume that is going to be the growth rate, low single digits, then IT stocks have a downside of 10%. But if you think it's going to get better, maybe IT companies can clock in a growth of 5-6%. Better than what we've seen over the last 3 years, but not at par with the long-term growth rates, then maybe stocks stay where they are. But in the bearish scenario, if you assume that AI is going to severely impact the entire sector, there's going to be no growth, a 0% terminal growth, then the downside risk seen for the IT companies is more than 30%.
All right, Rima, thank you so much for decoding what's happening with those IT stocks. But here's a warning from Microsoft's head of artificial intelligence, Mustafa Suleyman. In an interview to the Financial Times, Suleyman said, and I quote, "White-collar jobs, those sitting in front of computers, whether lawyers, accountants, project managers or marketers, most of these tasks will be fully automated by AI within the next 12 to 18 months, end of quote. Meanwhile, former Infosys CEO and current CEO of Vianai Systems, Vishal Sikka, told CNBC-TV18 that even though there's a gap between AI's promise and enterprise-ready reality, some disruption could be expected immediately. In an exclusive interview with CNBC-TV18, Sikka warned that it should not be assumed that slow adoption of AI means no disruption.
Things are always slower than we expect. Adoption takes time. Enterprises are very complex. They are like countries. Large companies are like civilizations. Some of them have been around for, hundreds of years, if not decades. So it takes a long time and even in terms of autonomy, there is a lot of still advancements to happen. Similarly, in the services industry, there are dozens of service lines. AI's impact on those service lines is not all uniform. It is not, doesn't happen overnight to all of them. Some systems are much more complex than others. And so the rate of change is always as slow as the slowest pipe in the network. But having said that, I used to say this 10 years ago, 9 years ago, whenever that was. And it is here now. And we have a short window of time in which to sort of transform. I think we have to separate the potential, the promise, if you will, of this disruption from how it impacts in the here and now. In the here and now, you have particular projects that people are executing on. And if a client expects that you now do this project dramatically faster or cheaper or with less people or whatever, then that would impact the here and now. But that is something that takes time. That's what I meant by depending on the service line, depending on the nature of the work, depending on the team that is involved, and things like that. So there is the fear in general of the potential of what this can do to knowledge work. But then there is the actual reality of creating an enterprise-ready offering that uses these new capabilities to deliver those. So there is a gap between.
Moving on to the day's market action, Dalal Street ended lower for the second straight session, with the Nifty slipping below that 25,500 mark. 44 Nifty stocks closed in the red. For the week, market ended largely in the red, with Sensex and Nifty falling nearly 1% each. But the outliers were those defense and PSU stocks, which outperformed and climbed nearly 4% each. From equities to commodities, gold prices have bounced back from one-week lows following robust U.S. jobs data and a strong dollar. Further fears of AI disruption also aided the overnight sell-off in the yellow metal. Globally, prices of spot gold in the international market are now improving marginally. Crude oil prices are on track for a second weekly decline despite recovering marginally today. This as concerns over a US-Iran escalation subsided and geopolitical risk premium decreased. The International Energy Agency's latest report lowering its oil demand growth prediction for 2026 also weighed on prices. Axis Bank CEO Amitabh Chaudhry has said that the bank is evaluating Credit Access Grameen as a candidate for a possible acquisition, adding that the process is in a nascent stage. Chaudhry added that it's incumbent on the bank to evaluate all opportunities and microfinancing is an important business. These statements come after CNBC-TV18 reported that promoters of Credit Access Grameen have initiated a process to sell their entire stake.
We will obviously evaluate this opportunity also, but we are in very, very early stages of that evaluation. We have not even decided whether we'll take the next step. But no, I mean, MFI is an important business. We've been building that business for quite some time. We have been trying to see how we can transform the business internally. Here, the question is whether you want to spend a chunk of money to buy a business from outside with all the, accompanying execution risks, or you want to build it internally. And that's a choice we will make at the right time. We are not in a hurry, absolutely.
AI giant Anthropic has raised $30 billion in a Series G round, valuing the company at $380 billion. The company has said that the investment will help it boost research, product development, and infrastructure expansions. Rachna Dhanrajani joins us now with all of those details. Rachna, how significant is the raise in the broader AI race?
Right. Anthropic's latest fundraise is a signal flare for where the AI race is headed. The Claude maker has pulled in $30 billion in fresh capital, pushing its post-money valuation to $380 billion and cementing its position as the clear number 2 in frontier AI. The round, led by GIC, quote, with participation from D.E. Shaw, Dragoneer Founders Fund, Iconic and MGX. What is driving that conviction, though, is not hype alone. Anthropic says its annualized revenue run rate has climbed to $14 billion. The customer mix is moving sharply upmarket. Clients spending more than $100,000 annually have multiplied by 7x, while those paying above $1 million have jumped from just over a dozen 2 years ago to more than 500 now. 8 of the Fortune 10 are already using Claude. Enterprise adoption is now visible on the ground. And that's the case across artificial intelligence and not Anthropic alone. We just saw Siemens say that AI co-pilots are embedded in parts of its engineering and manufacturing stack. In India, Bajaj Finance continues to highlight AI-led underwriting, collections and servicing as core to its model. Accenture and Deloitte are deploying internal AI agents. So the shift industry-wide is now pretty clear that Gen AI is moving from experimentation to operating infrastructure, and Anthropic is trying to position squarely for that in future. Now, even as the recent IT stock sell-off briefly rattled the AI trade, now to put AI trade, it was now being termed as the SaaS apocalypse. But how much of that holds up, we will find out. But to put the valuation in perspective, at $380 billion, Anthropic alone is now worth more than the combined market capitalization of the Nifty IT index, which sits near $300 billion mark. Still, the ride is not friction-free. Elon Musk has publicly accused Anthropic's models of bias, and the industry has seen some departures from safety and alignment teams at both Anthropic and OpenAI. That's number 1 and number 2 in the industry right now. Microsoft AI CEO Mustafa Suleyman also warned that the most white-collar computer-based tasks could be automated now within the next 12 to 18 months. Anthropic CEO had also warned that soon jobs will get disrupted just a few weeks back. And we are seeing that play out now. Now, all of this unfolding is amid an extraordinary capital cycle. Big tech is preparing to spend more than $650 billion on AI infrastructure this year, as we saw with the quarter earnings. Now, this brings us to the real test for Anthropic, which is execution. Now, OpenAI spent the last 2 years locking in distribution and is now under pressure to deliver margins and monetization, as we're seeing. And Anthropic is nearing a similar inflection point because the funding is in, expectations are rising. So what comes next will determine whether the capital surge translates into durable platform power. Back to you.
All right, Rachna, many thanks for taking us through those details. Now, moving on, the Supreme Court has rejected an appeal from Aircel, Reliance Communications and their lenders, seeking to classify spectrum as an asset during the bankruptcy resolution. The petitioners argued that excluding spectrum from resolution processes would render any revival efforts futile. However, the apex court held that IBC cannot be the guiding principle for restricting ownership and control of spectrum. The court also said that spectrum is a material resource of the community and its control has to be secured for citizens. Indian Energy Exchange's shares fell after the Appellate Tribunal for Electricity dismissed its petition challenging market coupling. The order clears the way for power regulator CERC to move ahead with the move aimed at discovering a single uniform power price across exchanges. APTEL has told IEX that it can move a fresh plea to challenge them if it has any fresh grievances. The first leg of the budget session came to an end after weeks of acrimonious standoff between government and opposition over various issues, including the India-US trade and former Army Chief Naravne's unpublished memoir. The House will reassemble on the 9th of March after a 3-week recess. Tamil Nadu government has credited 5,000 rupees into the bank accounts of 1.31 crore beneficiaries under the Kalaignar Women's Rights Scheme. The amount includes 3,000 rupees in advance, along with an additional 2,000 rupees as a summer special package. On that note, it is time for us to head into a short break. But coming up, the Trump administration revokes an Obama-era scientific finding, which concluded that greenhouse gases pose a threat to public health and welfare. More on that when we come back. Stay tuned. Welcome back. You're watching Business 360. The big international headlines of the day. BNP registered a landslide victory in Bangladesh parliamentary elections, clearing the path for Tariq Rahman to become the nation's next prime minister. Once a political pariah, the Jamaat-e-Islami emerged as the second largest party. Here's the caveat. The country's election regulator is yet to officially notify the results. 68% people voted yes in the referendum on constitutional reforms. Imran Khan's son has expressed serious concern over his father's health. In a post on X, Qasim Khan said that the former Pakistan Prime Minister has lost most of the vision in his right eye, with only 15% remaining. Khan's son also stated that he and his brother are still being denied visas to visit Pakistan. In response, Pakistan's Supreme Court has ordered a medical examination for Khan, particularly for his eye. US President Donald Trump has warned Iran that a failure to reach a deal about its nuclear ambitions would lead to a traumatic outcome. He also told reporters that an agreement is likely in a month, as Tehran will agree to Washington's terms. Quickly, this as the Pentagon sent USA's largest and most advanced aircraft carrier to the Middle East. President Donald Trump has revoked the Environmental Protection Agency's scientific finding in 2009, which concluded that greenhouse gases pose a threat to public health and welfare. The finding serves as the legal bedrock for the US government's climate rules. Sonal Bhutra decodes the impact the move could have on emission norms in the United States. Sonal?
Well, it is a major shift in US climate policy. The EPA, or Environmental Protection Agency, has rolled back one of its most important climate rulings. Now, back in 2009, they put out something called as the endangerment finding, which officially concluded that greenhouse gases like methane, carbon dioxide, they are impacting the environment and they're harmful for human beings as well. And now, the single scientific decision basically became the backbone of US climate science and US climate regulation as well. It allowed the government to set limits to pollution coming in from vehicles, power plants and other industries as well. But this has been repealed under President Donald Trump, and EPA Administrator Lee Zeldin, they said the finding has now been repealed, and they called it the largest deregulation move in American history. How does it change things? So basically, the US government will not be able to regulate pollution standards. They will not be able to set limits to pollution from motor vehicles, from powerhouses and manufacturing industries as well. And it will not give them any authority to regulate greenhouse gases in the country. They also plan to delay or weaken clean technology and vehicle emission standards which are linked to the ruling, and they have their own arguments. They say it will cut compliance for most of the businesses and it will lead to savings of $1 trillion. But you know, climate science says something extremely different. There have been papers as recent as 2025 and as old as 1979 which talk about how scientifically it is proven that greenhouse gas emissions cause temperature rise, they impact flooding, they impact the environment, and actually cause climatic issues as well. So those things will come up for you on the screen. It's from IPCC, which is the Intergovernmental Panel on Climate Change. There have been studies from EPA itself which talk about it. In fact, as far back as 1979, one of the reports had already confirmed that human-produced carbon dioxide would heat the planet. So in simple terms, what it meant is greenhouse gases, they trap the heat and they increase the temperature of the earth, and these have been proven by scientific studies. So this has come in as a shocker and has received a lot of backlash from some of the activists and the industry as well.
All right, Sonal, thank you so much for taking us through those details. Goldman Sachs Chief Legal Officer Catherine Rumela has resigned after documents released by the U.S. Department of Justice revealed her close relationship with convicted sex offender Jeffrey Epstein. The documents indicated that Rumela accepted gifts from the late financier and advised him on how to address media inquiries regarding his crimes. Rumela and those around her have insisted she had a professional relationship with Epstein. Her resignation will be effective June 30th. The Epstein files fallout has also hit the top brass of the UK government. Britain's Cabinet Secretary and Head of Civil Service, Chris Wormald, has stepped down from his post. This after reports suggested that Wormald was responsible for conducting due diligence checks before Lord Mandelson's appointment as US ambassador. Mandelson quit after his name came up in the Epstein files. And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.